very fortunate to have Brian come and support us again and again. He was with us a few weeks ago, last Friday, less than a week ago in Knoxville. He did this presentation, and I saw this presentation. I really think this is a great presentation. So, Brian, we'll let you take it over. Thanks again for coming down to Nashville. We really appreciate it.
Good to be here. Good to be here. All right, good afternoon, everybody. I appreciate Michael and the folks at Star having me here. You're very fortunate to have one of the most professional distribution companies in the country right here in this market. And proud to say that we've had a long time relationship as association and member company. And so we've worked together for a long time, and I appreciate all the support that we get from Star to do what we need to do on behalf of the association. I'd like to thank our number one salesperson, Jason, for your pitch earlier. Obviously, the more of us we have working together, the more we're going to get done. And we find that our members are doing more business than non-members. We can prove it. And our members have the best information, the best support, and understandably it makes them more successful in running their stores. For those of you that haven't met me, as Michael said, my name is Brian Wallace. I've been part of the Coin Laundry Association staff for 20 years now. I just had my 20th anniversary. I've been serving as president and CEO since 1999. And it's given me an opportunity to not only crisscross the country, but actually travel around the world on behalf of the laundry industry. And as I do about 50 to 60 of these types of events a year from coast to coast, I hope that I can pick up a few things along the way. This time of year, going to 2 or 3 cities a week helps me pick up information, hopefully that I can synthesize and share with each one of you. So my best qualifications to chat with you today is probably my frequent flyers account balance. Putting in the time and the effort to try to see what's happening in the business and share that with you. So my job this afternoon is not only to try to keep you awake after that big lunch. Wow, that's going to be tough. So if you have to nod off here and there, I'm not going to take it personally. I might fall asleep myself. So we'll try to keep it up-tempo. We'll try to share with you a lot of information in a short amount of time. I think the most important thing I can share with you is what's going on in the business right now. In this industry, it's great that you can come to events like this and talk with other laundry owners. The Tennessee Coin Laundry Association event next month, another great opportunity to share information and talk shop with your peers. But most days, it's you, right? It's you in the store. You don't necessarily have colleagues or people you can talk shop with. So this provides a very important opportunity. So I'm going to try to give you a sense as to what people are talking about in the business and what are the major trends. Obviously, you're welcome to take notes along the way, but I've set up a website where you can simply just download a copy of all these slides for free. So all the information, if you want to circle back and take a look at it, just do coinlaundry.org/materials, and you'll see this presentation, and in fact several others that I've been giving while I'm out on the road. Again, this week I was in Tampa Tuesday, in Orlando yesterday, and Nashville today, and last week was Chicago, Philadelphia, and Knoxville. And I haven't even thought about next week yet, but it'll be somewhere. This will be somewhere where they're doing laundry. So there's a lot of presentations on there that you can take a look at to help you along the way. Just a couple of quick things I mentioned real briefly. Those of you that have been members for a while know that we like to do educational programming throughout the year. Our next big event is coming up here just in a couple of weeks out in Palm Springs, California. This is our Excellence in Laundry Conference. There's still time to register. We just actually sold out of all our hotel rooms, but we were able to get some more. Really trying to bring together the best laundry owners in the country. We have speakers, we have tabletop exhibits, we have lots of networking among your peers that are really doing the best job in the industry. So if you need any more information on that, of course, you can go to the website or chat with me later. It's really sizing up to be a terrific event. Looking toward next year, I'd like to give you the dates for the Clean Show. Is everyone, who's been to the Clean Show? Okay, good group here. The Clean Show is every other year, the odd-numbered years. It is the largest laundry-related event in the world. Last summer, in 2011 in Las Vegas, we had over 12,000 attendees. We had almost 500 exhibits. Took over the convention center. If you're interested in growing your business, if you're interested in knowing what's going on in your industry, the Clean Show is your very best opportunity, and it only comes around every other year. So June 20th to the 22nd, June 20th to the 22nd in New Orleans will be right at the convention center, and it's going to be a dynamite show. So if you've never been to the Clean Show, you should really take advantage of that. You'll see literally every piece of equipment on planet Earth that has anything to do with this business. If you're also interested in dry cleaning or commercial accounts or OPL, any other aspects of the laundry business, you need to buy textiles, you need to buy towel sheets. Every manufacturer having anything to do with washing clothes or taking care of garments will be present there. So cleanshow.com, go to our website, you can see lots of information. 3-day show, very worthwhile, very worthwhile. The other thing I want to mention before I dive into the content is our insurance program. Just to give you a quick update. Next year will be our 25th year in business as an insurance agency specializing in the laundry industry. I've been involved in this program for at least 15 years. In fact, I'm a licensed insurance agent, not only back home in Illinois, but in Tennessee and all 50 states. It's our #1 benefit program for our members. It has been for 25 years. We have literally thousands of stores insured with us. In fact, just about 50% of our members coast to coast write their insurance with us. We have that strength in numbers. We know your business. We know how to take care of your insurance needs. And one thing we did last year is we had a bit of an expansion where we know so many of you have other businesses, other properties, commercial properties, other things that you're doing, and you've always had to sort of unbundle your insurance to write the laundry with us, even if it is at a discount. Well, we have a new program now where we're able to take on all of your other interests from an insurance standpoint and make it a little bit easier for you having fewer policies out there with multiple agencies. So that's been a great success in the first year that we've offered it, and it's something worth shopping. 2011, I'm proud to report that once again our retention rate was 95%. That's in fact been our average over the last 5 years. People that write insurance with us stay with us. Great service, great product, and in fact we probably have policies out in the field now with 6 or 7 different carriers. We shop it for you. We shop it in-house. That's how we're able to retain 95% of the accounts every year. That includes people closing stores and selling stores. So our real retention rate is probably that much higher than that. So if you haven't taken a look at the insurance program recently, it doesn't cost you anything to get a quote. Just make sure that you're not overpaying. More importantly, make sure you got the proper coverage in place. Sometimes the local storefront agent doesn't know all the needs that you have in insuring a laundry. This is all that we do, and we've been doing it for almost 25 years. Okay, so the state of the industry. It's a lot to kind of put our arms around what's happening in our business. I guess I want to start by going back to the beginning of the recession. And if you've been in the business any period of time, you've heard the adage that, well, the laundromat business is a recession-proof business. Never goes down, never has a hiccup. It's always there. Okay, well, I heard that for many, many years. Is the laundry business a recession-proof business? No, I don't think so either. Is it a recession-resistant business? Put a little finer point on it. I think so, meaning that no one's immune from a tough economy, not even us. However, we really hold our own. You'd be hard-pressed to think of another small retail business that you'd rather be in during the economic downturn than ours. So while we'd rather not do it again, go through another deep recession, I think what it does is it gives us a lot of confidence and affirmation that we're in the right business. Right? So yes, we had customers tightening their belts. Right? Maybe they're stretching laundry day a little bit further. Maybe they would wear garments multiple times. Maybe they would shove that many more clothes into a smaller washing machine. Right? There are those little incremental savings that the customers would do. But they're still with you. Granted, some of you, depending on your neighborhood, you may have seen the economy hit very hard and perhaps even saw some loss of population. Demographics may have changed in your town. And so we did have some members that did suffer greatly during the recession. But they tended to be in markets where, especially if they had a large Hispanic trade, Hispanic immigration trade that found themselves out of work, perhaps under pressure from an immigration standpoint, and simply moved or went back home. And so the other main lesson that we learned from this is a reminder that we're in a neighborhood business. Right? As goes your neighborhood, so goes your laundry. I was talking to one of our members in Phoenix the other day, about to head out there again here in a couple weeks. Been in the business a long time, multiple stores. I would say one of the best operators in the country. I met him at the same event I'm going to in a few weeks a year ago. And he said, Brian, I'm off 50% in my sales. Did he get lazy? Did he forget how to run a good laundry? Or did his neighborhood move away? So, a couple lessons. We're in the right business. We can take a gut punch. We can withstand a tough economy. Yes, some of our member stores were affected. It reminds us that we're completely dependent on demographics and the health of one's neighborhood. And it's not even regional. People say, what's going on in the Southeast or what's going on in the Midwest? I think that those kinds of analyses are very limited in their benefit. What's going on in Nashville, frankly, is probably not close enough to giving you a sense of what's going on. When I start talking about what's going on within a few blocks to a mile from your location, now we're talking. Because that's where you really gauge what's happening in a business like ours. So, I guess the first trend I wanted to talk to you about with that preamble is there's a lot of confidence in our business right now. And a lot of it is because we did withstand a very difficult economic period. We held our own. For many of you, I heard, well, I was flat. I was up a couple percent, down a couple percent. And you might not think that's a lot to get excited about, but considering what the economy did, you got to feel pretty darn good about that. I started to say flat is the new up. Right? The last couple of years, just about anything, if you held your own, you're performing at a very high level. And now that things have improved, for most of us, we're seeing that continue on. And this confidence index, if you will, we hear about this consumer confidence index, this number that comes out once a month and is supposed to give a sense of how we all feel as consumers. Well, I just made up the laundry confidence index, right? And it's pointing in the upward direction. And as I've been traveling these 2 or 3 cities a week, I'm hearing this nonstop everywhere I go. A lot of confidence. A lot of you have sort of taken stock and said, you know what, I'm in the right business. I may have been in other things in the past. I may have been in real estate. I may have been in construction. I may have been doing other things. But you know what? At the end of the day, the best opportunity is right under my nose. It's a business that I'm already in. So I've had a gentleman in Florida say yesterday, you know what, I was thinking about buying another duplex, or I was thinking about putting a few more dollars in the equities market, but you know what? I think I'm just going to get another laundry or re-equip one of my stores. I mean, that's what I'm hearing a lot of because it's proven itself. You know the business, and it's performed very, very well. So equipment replacement, new store construction has definitely rebounded. We're seeing a lot more investment in marketing and advertising. Many more of you are actually taking the bull by the horns and actually promoting the business, trying to get more people through the doors. As I said a moment ago, there's definitely an increase in the number of multiple store owners. I'm not talking about huge national chains. I'm talking about folks with one store adding a second, people with 2 stores adding a third, because one of the very strong down economy opportunities that's still out there is that you can make acquisitions for cheap. Money's still cheap if you can find the right opportunity. And frankly, if you're going to build something, most of the contractors, most of the trades that you're going to, you're going to be able to build out something a lot cheaper than you could even 3 or 4 years ago. So I'm actually seeing an upswing in this. I'm calling it a consolidation from within. Not some big company saying that we're going to come in and be the McDonald's of the laundromat business. It's you as an individual saying, I'm going to add a little bit more to my portfolio for laundry. I'm going to add a location. I'm going to re-equip a location. And I'm seeing that everywhere I go. This conference we're having out in California in a few weeks, the attendance is going to be great, getting a lot of support The last 10 or 12 people I talked to that are no's, that I've talked to that can't come to the conference, Brian, I've got another store going in. Brian, I just broke ground on another store. Brian, I got a major re-equip happening. I mean, it's music to my ears. I'd love to have them out at our conference, but people are active right now because their confidence is high and they're seeing where the opportunity is. They're seeing a window here that, hey, we took the tough economy, we held our own, and I think that's where we want to be going forward. So this scenario is going to mean something different to each one of you individually in terms of what your experience was like, what you're experiencing now, and where your confidence levels in the future. I'm just giving you the overall picture. It's very, very positive right now. So let's talk about some other things that are happening that are heavy conversation on the tip of everyone's tongue. The next one is alternative payment systems. This is a huge buzz right now. Has been for the last 2 or 3 years, but it's gaining momentum. And really what this means is you all collectively are getting off the quarter. Or I should say you're getting off the quarter only as your only method of payment. And this is happening rapidly, more rapidly than almost any other chain that or trend that I've observed over the last 20 years or so. It's really been remarkable. Because I think many of you are realizing that, man, we've been on quarters since we came off the nickels and dimes. It's been 30 years, and we've been on the same method of payment. You just can't get a whole lot out of a quarter anymore, and you've got a couple different demands happening. You've got customer demand. Consumers want to pay differently. They want to pay via card, whether it be credit card, debit card, or store card. We're going to a cashless society. You may like that, you may hate that, but that's what's happening. You're seeing that a lot of the technologies are now more focused on smaller dollar transactions, whether it's someone swiping a card for a $3 order at a McDonald's. Car wash industry is way ahead of us adopting some of these technologies on small size transactions. The other thing that the quarter has done to us, frankly, is that it's really impeded our ability to raise our vent price to the degree, with the flexibility that we like and with the frequency that we need. We've done an awful job keeping up our vent prices over a period of years, and I blame the quarter as a big part of that. So as we look at some of these considerations, the beauty of the situation is, yes, the traditional card systems, which have a lot of very positive attributes, have been in the market over 20 years now. I can remember going to the first 100 card stores that went in the early 90s. I probably went to at least 75 or 80 of them myself. And those stores are continuing to be successful. It's a proven technology. And those systems have gotten better and better. So that option is still there in terms of traditional card systems that can now deal with credit card transactions as well. We have credit card acceptance. We have readers that will take the credit card right at the machine. And that's gaining in popularity as well. There are a lot of different options. Central pay systems. We see another option in the back here with central pay systems. The other interesting that I've seen, you've got the technology side, and you got, we'll call it the analog side of the scale. In the last year, I probably have gotten more questions from our members about dollar coins and tokens in the last year than probably the last 10 years combined. So what does this all tell me? We're getting off the quarter. Or at least getting off the quarter is the only method of payment. And there are a lot of options that will allow you to take multiple forms of payment. So I see this as one of the quick to adopt new trends. As we track those numbers, the acceptance is going very, very rapidly, and people are going in that direction in a very strong fashion. So what does that mean to you? Well, and to one degree, you've got choice. That's the good part. That's also part of the challenging part. You've got to sort of suss out what's going to be the right fit for you. So events like this, we can talk to a couple of vendors that have different options. That's very helpful in your process of educating yourself and determining what's going to be the best fit for you. As an event like this a few weeks ago, and there were 6 different alternative payment systems being shown on in the exhibits. So the manufacturers have committed to this. They see this as a big trend, and I think it's something that if you haven't done now, it's certainly something you're going to be spending some time learning about. The Clean Show in June, I guarantee you, as soon as we're sitting here right now, this is going to be the big talk of the Clean Show. because every vendor will be there with their latest and greatest, and there's going to be a rapid adoption of this technology. So alternative payment systems, helping customers pay the way they want to pay, giving you better management data, giving you more event price flexibility, and we'll add to this with one of our other trends later when you get into dryer pricing needing to change, and you get into the larger capacity machines, the quarter is becoming rapidly obsolete. I was talking to a guy yesterday who was vending his 80-pounders at $10.50. He's not doing that on a quarter basis. Who's going to sit there with a bucket full of quarters to start one machine? So times change, but there are options, and these are some of the things that you're going to be learning more about as time goes on. So, speaking of this topic, kind of rolling into the next trend, new equipment introductions at an all-time high. Now, your first reaction as a laundry owner may be, who cares? What do I care if the manufacturers have something new? Again, not playing any brand favorites, happen to be standing in front of a whole new line from Speed Queen. And this is indicative of what we're seeing across the industry. Whether it be washers, dryers, water heating systems, alternative payment systems, vending, there is just an avalanche of new product that's been introduced here. And again, you may say, so what? Well, at the very least, you know that you have options, right, when it comes time for your next purchase. But again, I think this is part of this confidence building. I can't speak for Speed Queen or Alliance, but bringing out a new line, completely redesigned, completely retooling the factory, that's not something that's done on a whim. That's done with a many-year head start and a lot of confidence for market demand long into the future. We're in the right business, folks. It may not be glamorous, right? It may not be the most exciting thing that you're going to come across, but people need to wash their clothes. People are looking for a better way to wash the clothes. Collectively, as an industry, we're only doing a small fraction of the dirty laundry that's out there. And as the equipment manufacturers reinvest in you, reinvest in the industry, that's a good sign for everybody. So it's not only just new lines, but you have new models, new controls, new capacities, more options that are coming to the marketplace. I mentioned the payment systems. Hey, you pick up a magazine, you're seeing a lot more people advertising what they're doing. That's a sign of a healthy industry. Right? A lot of other industries are really contracted, and there's just not a lot of activity. So we're in a strong business right now, and that should give you further confidence as you look forward in the industry. Okay. Another favorite topic of mine, because I'm seeing a ton of this. I alluded to it earlier, but we'll get a little bit deeper into it right now. Rehabs and re-equips. Rehabs and re-equips. Some of you may have gone that route. Some of you built new. Some of you took on a location that needed some help to try to bring it back to life, re-equip it, remodel it. Another down economy opportunity that still exists. If I'm being generous, if I'm being kind, I feel kind today, I know a lot of you guys, I'm going to say that there's only 10,000 lousy laundromats in the United States. It's actually quite a bit more than that. We'll say, conservatively, there's 10,000 lousy laundromats. You see them, right? Competitors. And you scratch your head and say, come on, man. At least sweep the floor. At least clean the windows. I mean, make some kind of effort. Of those 10,000 lousy laundromats, many, not most, but many, happen to be on good to great locations. The laundry's not the problem, it's the owner. Right? You see this. They've neglected the business. They got tired of it. They're doing some other business. They've got something else going. Whatever the reasons is, maybe they just got lazy. These are stores that have enormous potential that's going unrealized. It's dirty. The equipment doesn't work. Half the lights are out. They got a grizzly bear of an attendant behind the counter scowling at every person that comes in. You've seen it? Yeah. Right? It's unbelievable. Get out of the store. I don't want to have to do any work today. So, what's the opportunity? The opportunity that I'm seeing your peers take advantage of is seeing beyond this lousy store and seeing the great location. And maybe you've seen that yourself. Maybe you shake your head, you go by that store and say, man, that's a great location. Look at the parking over there. And he's running it in a terrible way. Well, what we're seeing is people are acquiring these locations, re-equipping them, fixing them up, and guess what happens? Sales go through the roof. And customers, well, I'll admit, customers have pretty low expectations, don't they? When you think about it. I want it to be clean. I want the machine not to eat my quarter. I want someone friendly to greet me. I want to get this chore done quickly and conveniently. They're not asking for the moon and the stars. They just want to. They're there to do a job. They've got a chore to do. It's work. If you can make that work easier for them, you get more sales. So these bad stores on good locations available at great prices. Right? Part of this mix is you got to buy it right so you can afford to do what needs to be done with the location. But again, a lot of times it's the operator that's failed, not the location. The other thing that we're seeing is, yes, you clean it up, and I'm not talking about, well, I bought this store, I fixed it up, and it does 5% more. No, it's doing twice the business, 3 times the business, 4 times the business. And in fact, I think from a demographic analysis standpoint, I think you have to treat it like a new location. You know, get back out to the basics and say, what's the market demand around here? What's the competitive environment? What do the demographics say? Because you can't really gauge it off what that store is doing now, because it's doing some business in spite of itself. You know, it doesn't really give you a true sense of what the store's potential is. The other thing that I'm seeing a lot of our peers doing is understanding that within those same 4 walls, they can actually build a larger laundromat. Right? Larger capacity machines. So I don't need to bump out a wall. I don't need to buy a larger location. I can actually build a larger capacity store by going with more of the double load, triple load, in fact, a lot larger equipment. And of course, you need the parking, you need the throughput in order to handle that. But you may be finding that not only can you rescue that location, you can probably do a lot more laundry in that square footage than the current owner was able to do. So lowering utilities, you know the story. You look at this store, you look at it for sale, and it's running, maybe it's running 35% utilities to gross, or 40%, or 50%. And you know that if you re-equip it and run it the way you run it, you might be able to run that store certainly under 20% utilities to gross. And perhaps a lot less. I had a panel of 4 store owners the other day, can't remember what city it was, but 15% utilities, 14%, 12%, and 11% utilities to gross. Incredible. It's possible now. By simply buying, I don't care what brand it is, frankly, buying what equipment is on the market today, you can really take that dog of a store and make it into something special. So, diamond in the rough, whatever cliche you want to add to it. I'm seeing a lot of this, and there's a real opportunity out there that your peers are taking advantage of. Okay. Here's another thing I wanted to add to our list of trends to talk about because it's so important, and that's the credit market, the availability of financing. As we went through the tough economy, this was literally front page news, right? Small businesses couldn't borrow money. The home mortgage business collapsed. Commercial real estate, there wasn't money to be found. You couldn't get a single project underway with the financing. And toward the beginning of the recession, I heard a lot of that in the laundry business. And I think some of that was it just wasn't what it used to be. Whereas I think nothing was like it used to be. But in fact, 2 summers ago, maybe 3 summers ago now, I was hearing a lot of this concern about financing in the laundry business. So what I did is I set up appointments. I actually went out and visited every single one of the, 4, 5, 6 laundry finance programs out there. Went up to Ripon, Wisconsin. Went out to all the other locations. And I sat down with the folks that run those finance programs for all the companies. I said, you tell me what's going on here. Because I'm hearing all this static. Give me the real scoop. And what I found was, and those of you that have financed deals in the last 3 or 4 years know this is true. The financing is, in fact, available. In fact, it turned into a situation where the laundry finance companies were among the only ones that would do business. One of the anecdotes that I heard separately from several of these visits was that not only were their loan portfolios performing well, because your stores were performing well, but they actually, to a large degree, were getting a better quality of applicant. Why is that? If you used to go down to your local banker you've done business with for years, did all kinds of projects, maybe even on a handshake basis. What happened to that local lender's ability to do your project? It went away. A lot of times they were gone. Somewhere many rungs in the ladder above them, they weren't able to do these kind of loans that they used to do. So programs like Alliance Finance, we're actually seeing some better qualified people coming in for loans because they couldn't go through the normal channels, the conventional lenders. In fact, I heard from a lot of the conventional lenders during this downturn. What kind of questions was I getting from a typical local bank? What's this used equipment worth? I said to take back a laundromat. What am I supposed to do with this? The local bank doesn't have a clue. In fact, a couple of your peers in larger markets actually got a side job as a result of all this. A couple of our members actually got work managing stores that defaulted for the local banks. The local bank takes back a couple laundromats. They literally don't know what to do with it, how to liquidate it, how to make best of it. I've got a friend of mine in the Midwest. I talked to him one day. I could hear the familiar sound of quarters in the background. I said, where are you at? He goes, well, I'm taking care of my orphans. The orphans were this local bank that had 3 laundromats they had to take back. They sought him out as someone who could at least collect the store, get the equipment working, keep it going so they could try to mitigate their loss in that particular location. The fact of the matter is the industry finance programs really stepped up and have continued to do so. And the availability is quite good. Those of you that came to the Clean Show last summer know that we had a panel. I interviewed a panel of all 5 or 6 of the industry finance companies, and they gave you direct advice on how to get funded, how to make the process easier. And most of it came down to just prepare a good loan package. He said the biggest problem they have is incomplete packages. And those of you that have been in the banking business know that that's a big part of this. Simply give us something complete that we can work with. So this gives me confidence knowing that there's the capital available, the financing available to help fuel future growth of our industry. So make yourself easy to help, and that's been one of the major trends that I'm seeing right now. Another big trend, marketing and advertising. Well, for about 50 years, our industry as a whole basically did zero advertising. It was field of dreams. Build it and they will come. I spend this money to buy or build a store, and you look out the window and you wait for the customers to come in. And, for a long time it worked. It's nice not having a line item for advertising and marketing. It's nice not having to spend the time on that. But I'm here to say things have changed. The competitive environment has changed. Not just the other laundromats down the street, which I don't really think of as your main competition. But homeowners were buying what kind of machines by the millions these days? Homeowners. Don't have a small chassis. Yeah.
Right there, yeah.
Right here. By the millions. Remember, we used to be the only place you can go for a front load, double load or larger machine. What about the apartment laundry? That, by the way, is your main competition. We'll come back and do a talk about that sometime. The apartment laundry is your competition. Depending on your market, 7 to 8 out of 10 renters never leave their building to do laundry. None of your stores. Doesn't matter if you have 3 competitors. None of the 3 of you are getting that 70-80% of the business. They stay in the apartments. How are the apartments re-equipping and rehabbing their laundry rooms? Card systems, front loaders, more creature comforts. It's not always just that old top loader in the basement that the tenants are scared to go down there. Right? The apartment laundry rooms are getting better. That's what should be getting your attention right now. And that has precipitated the need to become better marketers. When you had a captive audience, we had the people that had to use your laundromat, you could get lazy. You wouldn't have to do a lot of advertising. And if you remember, the laundromats themselves even reflected that dynamic. Right? Spare, Spartan, plain, utilitarian, right? Depressing environments in which to do laundry because the customers had to go there. They had no choice. Now customers have choice. And And it's not just the laundromat down the street. It's the home laundry room. It's the apartment laundry. and that precipitates the need to advertise and promote. If we want to grow the business, guess what? We got to advertise. We got to market. And in fact, as I continued my busy schedule throughout the recession and visiting with lots of laundry owners, I paid very close attention to the people who said, you know, I'm not flat. I'm up 10%. I'm up 20%. I'm up 30%. What do these folks have in common? I was listening pretty closely. One, we can talk about another time, is Watch, Drive, Hold, and commercial accounts. Really grew their business during that period of time, especially the commercial business. But the other main thing that those folks had in common was we started to advertise our business. It sounds so rudimentary to those of you that are in other industries. You probably wouldn't think about not advertising. But we got into a 50-year habit of doing no advertising. So those that have had the most success not only have done more marketing, but have really focused on the web and social media and all things digital. Which again, can sound counterintuitive to a laundromat. But these are the things that are working. You talk to the people that said, hey, I'm up 20%. I say, how? They say, web. First thing out of their mouth, it's the web. Because consumers are looking for laundries. If they can't find you online or can't find you through social media or both, you're invisible to them. CLA believes in it so much that most of our new benefit programs that we're offering are really there to empower you to market your store. We have a whole direct mail marketing program, DIY Direct. We have Laundry Web Network. I don't know what the number is now, well over 500. We've built a free website for every member that wants one, help them promote their stores. A lot of these conversations tends to steer toward, well, the industry is saturated, it's a mature business. Every time a new store goes in, it just splits the pie into more smaller pieces. What we're trying to do here is we're trying to bake a bigger pie. That's how we're all going to be successful in the next 5 or 10 years. It's not, if I'm going to grow 5%, I got to take 5% out of Bobby's laundromat. That's not how we grow. How we grow is get more people using our stores, more people out of the homes to be occasional customers, more people out of the apartments understand we can do it better, faster, and more conveniently for them. That's where the billions of dollars are, additional sales for our business. And this is not just an academic conversation. Your peers are doing this right now. They are advertising the heck out of their stores. Lo and behold, they have more customers. So another important trend to stay on top of. Okay, so I've mostly talked about positives, right? You would agree with that? But I gotta keep this level-headed. We've got some challenges, don't we? So one of the trends I wanted to talk about, let's start with the good news. Now, I know Tennessee, for natural gas, is a regulated economy. But even with that, the natural gas prices have come down. In fact, if you look at the NYMEX in New York, where the commodity price is being traded every day, natural gas is going for 27, 28 cents a therm. I mean, those are prices from 15 years ago. Because I was here, I used to do gas programs for some of our local chapters. In this past decade, we were paying, what, $1.28, $1.40. Out here, you're paying well over $2, sometimes even $2.50 a therm. Incredible. So even in a regulated environment, like you have here in Tennessee, all of you got a massive raise in the last 2 years because natural gas has gotten so cheap. Question 1, did you treat it like a big raise? A temporary boost to your bottom line? Are you treating it as a permanent condition? Has it given you a false sense of security? Those are things to think about. So even if we've gotten this raise on natural gas, that's been counterbalanced by what? Water and sewer. So while we're enjoying lower natural gas costs, and we don't know how long that'll last, the pundits are all over the board, the analysts are all over the board, but we do know that water and sewer is costing us more. And I think, from the research that I've done and the interactions we've had as an association, I believe that this is a permanent condition. I believe that your water and sewer rates will continue to escalate as long as you're in the laundry industry. Whether you're going to sell in a month, a year, or 10 years, I think this is a permanent condition. Because you've got all these different factors that are contributing. You've got, in some parts of the country, you've got a supply issue out west, or even we had a bad drought in the southeast for the last couple of years. So you've got that supply issue happening. You've got the wastewater treatment part of it, which is a huge part of it. You've got the Clean Water Act, which is almost decades old at this point. But all these unfunded federal mandates have come due. I don't care what town you live in or what district you live in or what state, you probably have built or are building some kind of updated water sewer treatment system. Big infrastructure. Who's paying for that? The ratepayers. The ratepayers. So that's the second item. The third whammy is this one. The pipes. You've seen some of these reports about the aging infrastructure. Maybe in your hometown you're having more water main breaks and other leaks. You hear people saying, well, right? According to the American Water Works Association, right? So they have an association, so all the folks that run the water districts. I bought a membership for CLA, so we keep an eye on what they're doing. Their estimate is $1 trillion to fix the pipes. $1 trillion for the wastewater infrastructure. Who's going to pay for that? We are. We are. So, is that a reason to go running for the hills? Probably not. But you got to run your business with eyes wide open. You have to know that this is going to be a permanent condition. If I'm wrong, at least you made yourself more efficient. Right? It's no longer a best practice to have the most efficient machines. Now it's a must for survival. You simply can't be profitable when you start looking at the cost structure. So we've got to use the least amount of utilities possible when it comes to water and sewer. The customers aren't going to like it, but it's going to cost them more to do laundry. Right? You've got to raise your prices. If you're not raising your prices as your costs go up, what's the net effect?
Losing money.
Not only you're losing money and closing down, the way I look at it, and I can make it sound easy, but you made a conscious decision to make less money. You may feel like it's passive, I'll keep an eye on it, but you really made a proactive decision to reduce your profitability if you fail to react. I don't care if it's your rent, I don't care if it's your payroll, I don't care if it's your insurance, whatever it is. You've got to keep up with the cost, and water and sewer is going to drive a lot of that. So yes, should it be concerning to us long term? Absolutely. In fact, at the Clean Show last summer, you might remember we brought in the national experts on water policy and how these districts set their water rates. He gave us a tremendous presentation on this topic, and because we know it's important to our future. The good news is, the silver lining is, we've got equipment that uses conservatively 20% less, but in a lot of cases 30, 40, sometimes even 50% less. We've got the ability to raise vent price. Now we're back to the alternative payment systems, and you needing the ability to have a lot more flexibility with how you charge, because you know, as you're sitting here today, you can't go 5 years, 6 years, 8 years between price increases like the old days. You're going to have to be moving up on price on a regular basis. So you need the tools and the technology to help you do that. Advocate, yes, we do need to advocate. There is some strength in numbers. It does pay to show up at the hearings. It does pay to have your voice heard. Certainly as an association, we've done some things like with wastewater evaporation allowance and a couple other things to try to help you make your case. So you have to do that, but in the back of your mind, you have to know it's a done deal. We're going to be paying a lot more for water and sewer in the future, and now's the time to prepare for that. Build that into your business plan long term. So, we take that all together. Again, to me, the most important message is confidence. We're in the right business. We perform well in good times and in bad. We just went through a big test of how we perform as an industry, and I think we've come out of it very well. That's matched with new equipment, new technology, new efficiency, new payment systems, and a lot of reinvesting in our industry that gives you a lot of tools to work with. We've got to keep an eye, as we always have, we've got to keep an eye on utility costs, really watching that ratio, knowing that, boy, in the old days, maybe I could afford to run 30% utilities or even 25%, but today, my next competitor is going to open the doors at probably under 20, but probably closer to 15% utilities to sales. Am I going to be able to compete with that? Am I going to be able to continue to operate the business the way I want to? So as I sit here, with my 20 years into the industry, many of you have more time than that into this, I've never been more confident. I truly believe the best days of our industry are ahead of us. There's a lot we can accomplish together, but we just have to understand what the new realities are and take advantage of those things. So with that, that's what I wanted to share with you. Certainly, if you have any questions or comments, I'd be happy to entertain those now. If not, we'll turn it over to the next speaker and keep things moving. Anything else you wanted to ask about? Okay. Well, thanks. I'll see you next month up in Greenville on the other side of the state, and we'll talk some more. Thank you very much.